200.
Do what you want, I don't care anymore. Not gonna let these shoulders carry on. You said it all when you told me about the things I lost. How can you now myself. I can only hear what I'm saying, and my circle self-aware. And can I get there? Can I get there? Now I only see myself. I can only hear what I'm saying, and my circle self-aware. And can I get there? Can I get there? Do what you want, I don't care anymore. Not gonna let these shoulders carry on. You said it all when you told me about the things I lost. How can you now expect me now to leave it all? Don't you worry, the future pastures are always greener the less you know. Growing up is some kind of hurry. Well, don't you think we could take it slow? Now I only see myself. I can only hear what I'm saying. Better believe it. And my circle self-aware. Can I get there? Can I get there? Now I only see myself. I can only hear what I'm saying, and my circle self-aware. Can I get there? Can I get there? You better believe. You better believe it. You better believe. You better believe. You better believe it.
Might get arrested. She sitting on new shit. We still getting messy. Playing the need up. While she got her flit up. And she let me from the neck up. All I wanna do is fuck it. I don't care if you rush it. Only care if you touch it. Everything that you does it. Backseat for good loving. Could've just got a hotel. You look good for the rent. Only care if you know me. She got gold doors, make a nigga wanna relapse. She got gold floors, make a nigga wanna recap. I could tell I love you from the first day. I said you was waiting when we first met. You were lost, dying just to be lost. Why your diamonds do me like the tongues? My love ain't by the sound. It's a fire in my heart and soul. It's a fire in my heart. like the regiments. Playing Anita, but I got her feet up. And she licking from the neck up. All I wanna do is fuck it up. I take my time if she give me that.
Hey, good afternoon, everybody. How we doing? Everybody good? Yeah, nice. Don't be afraid to get a little bit closer. Today's going to be an open, honest conversation. So I'm going to be talking a bit, but I really wanted you guys to get involved, right? So I have some opinions. I'll throw some stuff out there. That's where we kind of shape the room a little bit closer, so maybe you guys can look at one another and see who's got something to add. But this group is brand new. So number one, thanks for being here. This is our first one for 2026. We're going to be running this on a monthly basis on the fourth Thursday. I think that's what today is, of every month moving forward in this room. So I hope to see you in the future again. But it's called Raw Conversations, because that's what it's all about, right? It's not just me up here presenting and sort of blabbing away for 2 hours and telling you what to do and what not to do. I have some opinions, but I don't know it all. And I think as an ecosystem, especially in the earliest of stages, we need to communicate better. We need to communicate more. Let's have conversations, even some difficult ones, so that we can all help each other improve this amazing Austin tech scene that we have. So that's the plan. It's a conversation. Cool? Does that make sense? You guys cool with that? Yeah. Nice, cool. Does this thing work? Maybe not. Let's see. So I recognize some of you guys. There's some amazing faces that I've met before, some of you that I've had a lot of great conversations with as we navigate this early stage ecosystem. But I think there's a lot of you that I don't know. So by way of introductions, my name is Arturo Pina. Yes, like pineapple, like pina colada. So that's why I have the little pineapple there. If you want to find me on LinkedIn, you'll also see that little emoji on my name. So that's a good way to remember and find me in that crazy world that is online. But I come from a founder background. I'm an entrepreneur. I started my first business when I first moved to Austin over a decade ago. I'm still operating today. That was more in the SMB space. Fired myself, got into tech as an early stage employee and founder multiple times. And I got to see some cool companies go from like, we have no idea what we're doing, pre-everything, right? Just 3 guys in a room saying, let's do something. Through Series C, raising a few tens of millions of dollars and 2 exits, totaling 300-something million in exits. And then I really got back into the scene actually through Capital Factory as a mentor about 3 years ago to see what's going on out here, right? Like, what are founders doing? What do I want to do next? And that got me into this investment world. Started doing some angel checks. Just started seeing what's exciting. Like, honestly, I was trying to figure out if I wanted to start another company or just join, some amazing founder that's out here. Maybe it's one of you guys in the room. And just really enjoy the process as an angel to figure out how can I help founders, right? As an angel, my check value wasn't the biggest, so I really wanted to be more valuable by being hands-on and supporting founders in other ways, right? With some of the things that I've experienced and done in my life. And that was good. That felt good. It made me happy. I really enjoyed the process. And then I said, you know what, let's do more. I need to do more. I want to have a bigger impact in the world around me, and that led to going full-time as a VC. And now I'm a full-time VC, Fund One here in Austin, focusing on pre-seed, primarily in health tech and supply chain, as you see on there. But honestly, I love founders, early stage, and I'm here to help in any way that I can. So that's enough about me. The other way. Today's topic is conviction. Who's heard that word before? I'm ESL, so I had to Google this to find the actual definition, right? Who's thinking about conviction? Who can just yell out a definition of conviction in the tech space, in the venture space? Anybody? Oksana, great investor here in town, so maybe we'll hold off on you. I want to hear from maybe a founder or somebody in the room. Conviction, what does it mean? Don't be shy.
Deep belief in something, even when things get hard, you have that belief that will help you go through it, even when things seem contrarian. Like, I believe in this, so I'm going to keep pushing.
Yeah.
And that's going to help you go through all the hard aspects of it, because you have that conviction that at the end, you're going through the right path or following the right purpose or objectives or goal.
For sure, well said. Did everybody hear that? Maybe in the back too? Just that crazy belief that you can just walk through walls to figure something out. And the reason why I wanted to start, honestly, the year, right? Because I'm going to have a conversation like this every month moving forward on the topic of conviction is because I think that's something that we got to share as founders and investors, right? I still consider myself a founder first, investor second. So I really approach all of this from a founder mentality. So the other way, I'll learn how to use this eventually. This is what I put on here. Honestly, is exactly what he just said. An unwavering, firm belief in a vision, market, or team driving founders, there's half of it, to act to speed of uncertainty, like he said it so well, and investors to bet heavily on potential. As I said earlier, I'm a pre-seed investor, right? So a lot of times there's not a lot of data, a lot of signals, a lot of hard, tangible things that a lot of investors that we need to write a check, right? And that's not just in venture. It can be real estate. It can be a lot of anything that's money related. So that's the point of conviction today, right? It's how do we now straddle this founder mentality and this VC mentality? Nope, still don't got it. I also want this to be a little bit interactive. I know I said conversation, but if you're shy, we can also get our technology out. I want you guys to just scan that real quick, if you don't mind. It's going to ask you a little something. I think I can put it on the screen, on the second screen. Yeah. If you scan it, it should take you to Slido, which is an interactive thingy. And it's going to ask you, I forgot what it said, but it's something along the lines of, what do you think creates conviction? So now I want to get something tangible, right? Like I don't like theoreticals. I don't want to like sit here and just talk about, dreams and whatever. I want to get into like what you guys think would give founders and investors that conviction, right? So now we can get into like maybe more tangible sort of metrics. We can use the generic word traction. So what are some things that come to mind that will give founders and investors, I want to talk about both sides of it, that gives us that conviction. Is it working for everybody? Nice. So then if I do this, we should see that. Sweet. Delusion, I love that. Bad experiences, burning desire, clarity, passion, scalability, external. External is a good one. I might want to double click on that one. Let's see what else we got on there. Idea, love, method. First, an understanding of customer pain. I think somebody might have just deleted that one, but I liked it. Market vision. Nice. I want to expand on a few of these. Before I continue babbling away, does anybody want to call one out that you put in there, or another one that somebody else did, but it's really standing out to you, and kind of give me like, why that's there, why you think this can give us conviction? Delusion? Yeah, expand on that.
Completely delusional to one, sees an opportunity that nobody else sees, and two, believe in it so much that other people become delusional and invest in it.
Nice.
To be a part of your journey.
Yeah, honestly, I agree. I had somebody last week ask me like, like I'm not even the most successful guy, but they were like, "What is the secret to success?" And I said something similar. I was like, "I think I've been successful because I was maybe delusional enough to think that I could." Right? Like my first business started because I Googled how to start a business, and then like I realized legally it's actually pretty easy and cheap, and then I just didn't know that I could fail. I guess. Just got on the phones and figured it out, right? 10 plus years later, it does pretty freaking well. But probably just naive delusion, different words, right? But I actually love that. What else we got? Anybody want to call one out? Don't be shy.
I call mine the unspoken word.
The unspoken word.
It came to me through an experience, and whenever I doubted if I was heading in the right direction after a year, going to the right place, and we affirmed it through an unspoken word to say, I'm moving up this weekend.
Cool. Kind of like more internal, spiritual, maybe.
Something like that.
Cool. Yeah.
I'll call up on what I posted. I feel a perpetual desire to restrain myself almost all the time, and an instinctual need to pound on the table, because I have such overwhelming conviction that what's going to happen in 10 years is what I'm saying is going to happen in 10 years. That's the way the world is going to work. I'm certain.
Yeah, I love that. It almost even blends into some of like, I don't want to say delusion because maybe that kind of spins in a negative way, but you know what I mean? It's just like,
They're related.
yeah. I mean it positively, so we're good here.
It's also kind of the opposite of what the two people were talking about, but I put in other examples in that industry or other industries. That happens a lot, I think. It's where like, where you have an example or that you can take in that industry that you can apply with a different spin or something from another industry. So I think that's what gives founders and investors a lot of conviction. It's just like, yeah, we've seen that work.
Yeah.
You can be a competitor to X, and if the market value is there, then maybe that's out.
Yeah, fair enough. Honestly, there's not a wrong answer. And that's part of this conversation, right? It's like, how do we just continue to drive some of these ideas forward in the hopes that we sort of lift, what is that, like lift all tides, right? Boats, whatever. You guys know that one saying. Oksana, do you mind if I call you out and see if anything to add? I don't know if you want to get on the mic. Yeah. Everybody meet Oksana. She's the GP founder, too, of Sputnik. Been leading a lot of early stage investors, pre-seed investing, in a very hands-on accelerator type model. Pretty close to here, an amazing person. just, yeah, hit us up. What do you got?
Well, I think for me, like, first of all, I'm going to give you a funny example because we were doing some investment allocations right before I came, and I have a junior member of the team, and the startups are usually, they have a lot of hope. And what I was trying to pin one of my new team members is, and she is a very fashionable girl. So I said, like, imagine, so conviction for me, I said, imagine that when you're betting on this company, if you're right, I have to get you a Chanel purse in 3 years. And if you're wrong, you have to get me one, which is like a really big, like Chanel purses go for like, north of $5,000 these days. So this is a very significant personal. So to me, like when investors allocate, like what we're striving for is not a consensus, we're striving for there is something about these guys, no matter how raw that we believe, things will happen. And it could come in very different flavors. Because for those of you who don't know what we do at Sputnik ATX, think about like what we're building is, think of kindergarten for future unicorns. We want to prove to the world that unicorns could be built outside of Silicon Valley and they will not all be building foundational models. I think people in Austin are closer to the industry, closer to the real problems, and we could just build, there's a ton of talent. So basically our last 6-7 years we've devoted to making bets, and it's working, it's still in the process. But I think it comes with that, like there's just so much uncertainty that you have to anchor it in something. So one of the things that I would see as a conviction in an early stage founder, what is this person's why? What would make this person go through walls, wake up, have dead, beaten up, insulted by the customer or something, and like put up a smile and keep going, because we all have that reason. Like this is, being a startup founder is one of the least glamorous things you could do. That is not how it's portrayed, but in reality that's what it is. So like when I look at the conviction, like my first one is like, what's in here? What will get you? Do I have example of you actually going through goals? Do I have to understand that you understand or you felt the customer pain in such a way that you think that the world needs to be done better? And sometimes I also explain it. I hope all of you have had this like amazing love affair with someone where if that person lives in New Zealand and you live in Austin and they say, let's give it a try, let's live together for a month, you would abandon your offer at McKinsey and you would just like go there and just get in the place. You figure it out, right? And so like that is the level of belief that if you are thinking whether to start up or not start up, that's the level of internal conviction, whether you're right or wrong. You have to believe that this is how it will have to be, and the world does not exist. If it's a very rational one, I could take this job at Google, or I could take this startup, and this seemed to be like a good idea, take the job at Google every day, right? Because it's safer, and that will allow you to explore until you have that like passion, like if I don't get this done, when I will be in my 70s in the rocking chair enjoying my margarita or whatever you want to enjoy, or an iced tea, you're going to feel good about taking the chance even if it flopped. Because in that moment in time, you as a person do not exist without that. So that's like in the end, that's a longish answer, but that's what conviction, that's what I'm looking to see as a conviction as a VC.
Yeah, I love that. And what does she not mention? Anybody pick up on what she didn't mention? That maybe that's a traction, money, right? ARR, customer count. Sorry?
Market conditions or anything other than.
Yeah, there's no doubt that that has influence in any thought process from a VC standpoint, right? But in the earliest of stages, which I think there's a fundamental gap, and there's amazing women and people like trying to solve this like Oksana. But I still think we need to do more, and I think having these conversations on like, this is real, right? This is what somebody deploying capital is looking for. So then how do we as founders now sort of package that in a way that is attractive enough for somebody like Oksana to welcome you into the Sputnik ATX doors and build for 6 weeks? And you called it, what, the kindergarten of unicorns. It's an amazing program. If you haven't looked into it, please do. And great companies are coming out of it every 6 months.
Yeah, every 6 months we take one. But I think like that, like I've mentioned, this is the first cut of what we look at. We absolutely will look at, so like as a VC, I'm allocating, so my standards are very high. I am unapologetic about that. and when the market tells me I'm wrong. But I think we ask for people to have a product and a customer when we come in the door. And why do I do this, you wonder? I think part of it is a conviction, because if I'm allocating my investors' money into your startup, then I would have wanted you as a founder not to play it safe. I have this great idea, give me the money, Miss Investor, and I'm gonna go and build it. I will hire a team of developers in India, and like I'm really good at that. I'm like passionate that I'm gonna do that. No, I'm looking for you to basically have taken some sacrifices and maybe have built it in the garage. It does not always look like that, but if you think about this as VCs, you think about us as these like rich cats that have a lot of cash with us. That actually is not quite like that. Like if we are buying like, you know, the snacks and things, like unless they're sponsored, they like for this, if you look at the economics of VC, 2 and 20 is our economic. For the smaller fund of, let's say, $15 million, which is a lot of funds here in Austin, that's not a lot of 2, which is your expense ratio, to make things meet. So a lot of people who do that are actually also entrepreneurs shelling out of the pocket. So if I am taking that sacrifice, I would want you to have some sacrifice, because I have no protection. If you decide to go and take another job, and I will invest in people that have opportunities, then there is no backstop for me. So if you have not taken a little bit of the risk, a little bit of the sacrifice, then like, why would I back? The risk has to be symmetric. I have to know that you already all in before I commit my investors' money all in, because there is no backing out, and my money is typically locked with you for about 10 years. So that's a really long time. That's a commitment to like, that's like college and graduate school. That's like the kid goes from just being born to just making trouble. They're like, that's a literally big human horizon.
Yeah.
So that's another thing. And so for that, the market would matter.
Mm-hmm. Absolutely. Yeah. It's never as simple as just, you know, vibes and love and I really like this person, so here's $1 million. We still got to make money. I always joke with my founders, like, look, if we both get this wrong, I'm going to need a job pretty soon, right? Like, if I don't perform well as a VC, I have to perform, right? Like, it's actually my fiduciary duty legally to do what's best for my investors, right? And if I don't do that, like, not only am I out of a job, I can't raise another fund. Like, I'm not going to be able to invest in any of you. So conviction is a very powerful world. And, like, we both have to have that. And I love that, what you just mentioned about, like, we need to see that you've taken some risks, too.
Yeah.
And I have one slide after this that kind of starts digging into that. And then I'm going to show you guys some recent examples of some early, stage investments. So I want to switch gears into this next slide, because it was really, and thank you so much, Oksana. You can hang out, up here, or whatever you like.
But by the way, there will be there's sometimes the conviction means. I was listening to Ben Horowitz in a podcast, and he put money into Ilya Sutskever, who's the guy who had architected a revolt at OpenAI and then left, in his new company, where it was valued, I think, at $4 billion. Or it's just like really crazy money. And I think Ben Horowitz, I don't know whether he was fibbing or not, but he claims to believe that he that does not know or cannot say what this company even does, right? So I don't know whether there is a product. So when you're at that level, so the thing is don't mistake that for reality for most people,
100%.
Because that's what you would read, that is what will catch headlines, and that is what probably would. I mean, unless you have that sort of conviction, and then that is a wild conviction, go do that. God bless. As a physicist, I believe in probabilities. I would never say never, but I would say rare.
Yeah.
You have to be Ilya Sutskever and Ben Horowitz, and you have relationship prior to that for have that work for you. For everyone else, get a product done in the garage.
Yeah, amazing. I love that. Please give Oksana a round of applause. And it is so true, right? We're not Ilya or, wildly successful, famous, right? If you have recognition, it's a lot easier. I'll be fully transparent too. That's part of my strategy too. As one of the newest investors in town, I'm very focused on my distribution and my brand. Why? Because that's going to give me a further reach. I can find more founders. I can find more investors, right? But I'm not even a fraction compared to the folks that are out here. So those are outliers. I'm so happy you said that. It's a different reality, but there is money here. I wanted to specifically go over this because I get messages daily. I talk to founders daily, and a lot of people honestly come to me frustrated. I think it's because of my founder background. I think a lot of people feel comfortable just having an open conversation. I'm not a therapist, but maybe that's if I don't figure this out, maybe I'll become a therapist for founders only, right? But I did want to call this out, right? Because money is being deployed, right? In reality, Austin and Texas had a record-breaking year in 2025. What does that actually mean? Nope, the other way. For Austin alone, and I got some of these numbers. If you're involved with Capital Factory at all and get to see some of their presentations, I stole some of this from Brian's presentation a couple of weeks ago. But nearly $8 billion raised in 2025. That's at 116 year-over-year growth. Record-breaking year. It's safe to assume that that's only going to continue going up, right? That's massive. But the really cool thing is Texas also had a record-breaking year at $15 billion. There's some call-outs for specific verticals. Obviously, AI is super hot. There's robotics, there's energy, there's defense. The reason why I wanted to include some of those verticals, number one, we're in Capital Factory, and Station Austin is our sponsor and allowing us to have this meetup and to have a lot of these focuses. But the reality is that the way that I think of this, right, is as a founder, if you're experienced in this area, it's like, why not lean into that too, right? Or adjacent to it. There's geographies across the United States and the world that are really good at different things, right? The Bay Area's strengths are not the same as Texas' strengths. New York and Denver, like we all have different strengths. And that is a reality that I think we all need to face as investors and founders to understand what we're up against. So if you're doing something that maybe isn't a focal point for Texas historically and through hard data, like reset your expectations and understand that you're gonna have to go a little bit harder. And that's the point of this conversation, or like this specific bullet point, right? Hey, welcome. And I do have a little sad face on there because as a pre-seed investor, and I think a lot of you guys are early stage founders here, there is one small little bad thing that I found, is that the sub $5 million rounds are at a decade low. I don't have an answer why. If I did, maybe, I don't know, things would be different. But the point of this conversation, the point of inviting Oksana to come out and give us some wealth and like knowledge, and I need to like hear more from you guys too, is like, how do we now improve this, right? And one of the things that, nope, one day I'll get it. Let's see, quick, okay, cool. Oh my God. So you're a tech investor and you don't know how to use technology. There we go. Quick raise of hands. Who feels, if you've been around for a little bit in the tech space, who feels that early stage bar is higher now than 2 years ago? Majority, if not 99%. I see maybe you're a little shy, but it's okay. Yeah, I think so, right? This was...
It's hard to, I'm resistant to raise my hand. It's hard to tell. It was tough then too.
It's never been easy. We
1999 was easy.
For 1 year. But I'm sure, like, technically we could maybe make the same argument that the 2020, 21, that huge craziness was easier. But maybe there was also more competition, right? It's never that easy. Like we can close our eyes and think back in the past, and it's all rosy and like it's beautiful. But it's always been hard.
Right now it's different in one very pronounced way, which is that there's a consolidated fear around one central topic, which is AI. And I've never seen that in my entire. I've never seen people be afraid of one singular topic in my entire professional life.
And what do you mean by afraid?
So mostly the predominant fear of AI is that we're going to have to drive that I hear people talk about is that there's no path forward except either something like universal basic income. So I hear people talk about it all the time. The founder of Anthropic was recently asked what's the long-term future, and he basically said there's going to be 5 trillionaires and everybody else is poor. So that's the overall, that's the consolidated fear I'm talking about. It doesn't mean that it's right, and it doesn't mean that all the naysayers are correct. That's what they're talking about.
Got it. I mean, I think a lot of us are probably building in AI or investing in AI. So, you know, I guess I'm the kind of person that I try to look at my crystal ball and know the future, but I also don't worry too much about problems that don't exist just yet. I try to plan for it, but I can't lose sleep over this fear. And I feel like I need to carry that into my profession too.
Who do those numbers represent? Repeated investment and repeated entrepreneurs versus lower investment and brand new guys come in?
No doubt. Recently announced, you know, that a great company here in Capital Factory 2, Aptronic, raised nearly $1 billion of that. But my point is that capital is here and it's being deployed. You know what? Actually, that's a good segue. So WTF, I was going to say it, but I think we're recording it. Builds conviction at the early stage. I mean, that's what this whole conversation is about, right? I do have some examples of some pre-seed recent investments. So I reached out to a lot of my friends in the VC space, Oksana included, which got her out here. And I said, hey, look, I just need a short list of a few companies that you've invested in the last 6 to 12 months and why, right? For that exact question, which is, yeah, there's a lot of big numbers out there. And to Oksana's point earlier, you know, yes, that's great, and some of them might be outliers, but the reality is that there's a lot of great funds, a lot of great angels that are investing. I think we have a problem being a little bit too quiet in town. Capital Factory here does a lot of pre-seed and seed investments across a bunch of different verticals. So there is activity, and I think we just don't see a lot of it. So I do want to call some of that out. But I want to quickly cover this slide, which is the world has changed, and a lot of that is due to AI. And I want to specifically call out that, you know, effort stopped being the bottleneck. Who understands what I mean by effort stop being the bottleneck?
Yep. When we first tried raising for L1 blockchain as non-technical founders 4 years ago, just based on conviction, knowing that these things needed to change. Everybody's focused on metaverse. We were focused on actual hyper-organization. We wanted access to resources. Who we thought we wanted things to live. Now, we're literally closing strategic angel investors saying it is a race between you and the contracts that we're about to solidify with the people we're talking to before we completely close this round and just not need another dollar as a startup. With just one technical architect. So I think that's massive. So the world has changed, but this area of fear, I mean, I've been so delusional for so damn long. That's really just the only way I operate. You know, I'm glad the world has changed because people that come from our backgrounds or non-technical creatives never get paid attention to when it comes to capital investments with anything as it pertains to software development. If you don't come from some pedigree or, you know, she has more pedigree because she worked for a development firm for over a year.
Yeah.
My only pedigree is I've been in crypto since 2017.
Yeah.
Like, that's really it.
And I can expand on that too, right? Like, and I'll put both, because I have this conversation every single day from a founder and as an investor. So I'm non-technical, right? I've led a lot of product organizations. I can talk to engineers. I know enough to be dangerous, as people say. But at the same time, like, I will not fund ideas, right? And that usually comes from our non-technical friends. And that's why I wanted to call this out specifically. Even as Oksana said earlier, you know, she's looking for a product and one customer. Do you need $1 million to build a product and find one customer today? The answer is no. Unless you're doing some hard tech and like literally you got to build something, then cool, there's going to be some capital. Or maybe not. Maybe you just do it in your garage and it takes a bit longer. That, and Oksana just said it so well, right? Like, now we're talking about the conviction of founders and the risk that they might have taken, the sacrifices, the time that they have put in to figure out how the hell do you move forward on day 0 and day 1. And now the world has changed. Effort, which is what capital was used for, right? Labor, human hours. We used to have to hire so many people to code more. to sell more, right? The SaaS model was, yes, I'm going to go raise $100 million so I can have a massive workforce that's getting on the phone selling enterprise software. And that's capital intensive labor. That has changed, right? Maybe there's still value to that. But my point is and I just wanted to make this like a very specific call out. I might even include this on every conversation for the rest of the year. Is that, yeah, like ideas we're not going to fund. If you find somebody that's funding just ideas, please like call them, introduce me to them. I would love to have a chat with them because I don't think they exist. And it's just too risky. Like, let's also be real about the VC component of it, right? The investor component of it. You haven't validated that somebody's going to give you a single dollar for your idea. Why would I give you a single dollar for your idea, right? Unless you've like literally invented something net new. We're talking new technology that never existed in the past. Maybe that's worth investing as a pre-product idea. But then you have to be the 0.00001 like freaky geniuses out there that have literally invented net new technology. That doesn't happen often. It happens maybe a few times in our lifetimes. So I feel like now I'm getting a little too aggressive on this topic, so I'm gonna move on. But do you guys agree? Like, am I? Yeah.
I would have invested in myself 4 years ago.
Yeah.
Now,
Love that. Nice. So I talked to a few of you earlier today, and have some opinions. So I wanted to hopefully provide a little bit of guidance on what I would look for. Oksana mentioned some of these. So this gets a little bit more tangible, but let's have a conversation about it, right? So I'm going to have 4 things on here. There's a small description, but I want to hopefully try to get some like tangible examples that you guys might think of when you see some of these things, right? And this is all very much focused on that pre-seed, like early stage, the stage of building and investing. The first one, learning speed. How fast you iterate, adapt, based on real feedback. What does this look like for some of you founders? I know we have some great founders in the room. Anything you want to add?
Listen to your customers and just be able to iterate really quick and try to comb through the noise of all the bells and whistles and what's actually going to get them the outcome that they're looking for.
Yeah. I didn't think about this as part of this presentation, but you just kind of like made this light bulb moment in my head, which is related to the last slide, which is effort is no longer the bottleneck. We can now create an unlimited amount of code. In other words, features, right? So like to your point, listening to your customers and knowing like how do you adapt based on real feedback and not just more is better. My background before I turned investor was technically product management. That's where I sort of left. So I can nerd out on this topic for a while. I really love it. And then I went sort of corporate, and I had a lot of arguments with my peers when we got acquired and became 12,000 people around this, right? Like more doesn't mean better. But yeah, that's a great example. Anybody else want to add something about learning speed?
I understand that the normal answer is that what you're trying to say is that the normal answer is that the learning speed of iteration needs to be fast. But it's actually better if it's slow. Let me explain why. It's better if the feedback you're getting is this product is basically perfect. It's basically what I've always wanted. And if you're getting that kind of feedback, you don't need to go back and iterate. Now, if you're getting if you are getting feedback that's misaligned with what you actually have, then you need to iterate quickly.
Yeah.
But it's better to iterate slowly and be correct.
Yeah, I agree.
I think what you said probably ties into like pre-seed that you're talking about. Oftentimes you are finding the product market fit, and then once the customer's telling you the product's perfect, oftentimes that's when you're like scale. You're like running with it.
Yeah.
So yeah, the different speeds of iteration at different points in time, but definitely when you're trying to build conviction on an early stage founder, you want to see them adapting, getting consumer feedback, integrating that.
For sure.
Moving forward.
But that's the point I'm trying to make. When you're an early stage founder and the feedback is overwhelmingly positive, and they're saying that this concept is effectively perfect, you have incredible conviction.
That's assuming you got it right at the first time on the product, the ICP, the go-to-market,
If that's what everyone's telling you, then you have gotten it right.
Well, you got it right at the first time, which happens once every
So I want to add one angle to it too, right? Because there's feedback from like I'm telling you something. Here's my feedback. There's also like money, right? If your customers are telling you this is perfect, you're hopefully making a good bit of money, and your ARR or whatever, your month-over-month growth is really good, and like now you kind of switch the conversation, and usually that's when you get that product market fit, and investors might be actually coming to you versus us early stage founders trying to like knock on some doors and hopefully get a few minutes of somebody's day to try to get funding, right? But just to play devil's advocate, because I was reading about, I mean, I'm sure you guys are all seeing it too. What is it? Claude is coming out with like those plugins like every other day. Like it was perfect 6 months ago. And like, holy shit, they're doing some weird listening on some like futuristic crystal ball things where like every day they just knock $2 trillion off the stock market. So like it almost never ends. But I'm gonna really back to your early stage and maybe some of the things that we've already covered today, which is like, if you haven't had the opportunity to learn rapidly through iteration and feedback, how can I invest? Right? It's a sacrifice that Oksana talked about. Enough reps. So like reps, hours, right? Like we got to be able to have a way to prove that. So now this is where I'm like trying to be helpful, and like hopefully some early stage founders leave today saying, cool, how can I package this to go talk to investors tomorrow? Again, this is just my opinion. I'm not saying if you do this, you're going to go get invested. I'm also not saying that I'm going to invest you just because you can somehow check 1, 2, 3, 4. But it's just a new way of thinking, or like being a little bit more tactical into things and how we talk about, what we need as early stage investors. The next one is pricing behavior. Honestly, I wasn't too happy with this title. I was going to change the words pricing behavior. But the definition I put on here is customers willing to pay and how they respond. Again, I'm not talking about your million ARR, right? But have you done the reps? Have you had enough conversations to understand, is your product valuable enough for you to make $1, right? To Oksana's point earlier, there's a product and one customer. That's her simplified acceptance criteria to consider you for investment. But is there a way for you to prove this as an early stage founder? What is the pricing behavior? What is all of that? What does that look like from a customer standpoint? It's your messaging, right? Are you even like, this is part of what I do with my founders, distribution. Where are your customers? That's part of this pricing behavior conversation. Can you find them, right? Can you convert them? At least enough to have a conversation with you or put in their email for a free trial. This is all part of that pricing behavior mentality. And that's why I don't really like pricing behavior, because maybe that gets a little bit more into money. But the whole idea is have you validated anything from your customers, or are you just making assumptions internally and trying to make some money or raise money so you can go validate this? This can be done with $0. I think time alone can do this, right? Pick up the phone and call. I'm going to have an example here earlier. This founder is building some stuff in the restaurant industry. Hundreds of restaurant conversations with owners of restaurants to understand their pain point and like validate that, like, hey, if I give you this tomorrow, will you pay me $99 a month? Pre-product, pre-code, like pre-anything, pre-funding, and that got him funded. And I'll have proof here in just a little bit. So anyways, let's see the next one. Distribution signals. This is actually one of my favorites right now. I'll explain why, and then I want to talk about it because I want to get some feedback from you guys. As I mentioned earlier, effort is no longer the bottleneck. You just tell AI a little some, I want to create the next Microsoft, and it tries to create the next Microsoft code, right? Whatever. So if that's no longer what we use money for, to me, like raising capital now is primarily focused on distribution signals. And I kind of just touched on this, right? But it's like, how do they find and adapt and adopt your product? And is it organically or is it scalably, right? And I think scalably is not a word. When I was typing it, it gave me the little red thingy, but I was like, no, I like it. Is Rick Rubin? I love Rick Rubin.
We understand what it means. It doesn't have to be understood.
Nice. Yeah. So I'm glad you guys are following. But I want to have I want to hear some feedback on like distribution, right? And like, I kind of want to like hear it from the chicken and egg problem, which is, I was talking to somebody earlier about it, and it's like, well, I need money to get customers, but I need customers to get money, and this is to me part of this like distribution problem. What does this mean to you guys? I want to stop talking for a second, or we haven't heard from
I think if you're here, you might not have found your niche, the problem you're solving. So I think that really depends, because you should have some kind of anchor point. One of those, where you should probably hit the chalkboard, whiteboard on what's my initial engagement. You try to go for both, and then leave during your capital or your time. And you should take a step back and maybe realize that your business model is building or discovery.
Yeah, well said. I'll put the investor angle on that, right? Which is, sure, I'll give you a dollar, just to keep it simple. How are you going to use that, right? If you don't have the confidence or conviction, whatever you want to call it, that I'm going to find my customers in this area for this, because you haven't done the work, then we're just going to burn that overnight. It's pretty easy to burn ad money with your wrong targeting, your wrong messaging, right? So if you raise $25,000 check from an angel, you might be like, oh, I can finally do this. But if you haven't done this shit, that's gone overnight.
Yes, I completely agree with that. One of my mentors a long time ago taught me a literal interpretation, that founders need to be prepared to give a direct answer to what they would do with literally $1.
Yeah.
If you actually come to anyone in this room and say, I will literally give you $1, tell me a story of how you get $1.5 back. They can't just say, I can't do it for $1, you need to give me 25. I can't do it for 25, you need to give me 100. Do you have a plan for literally $1?
Yeah, yeah. And also to, I'm a founder first. You could be wrong. I don't expect my founders to be right 100% of the time. If I find that person, I'm going to be very, very rich. And we're just going to kill it, right? But, the expectation is not that, yes, you will make $1.50, but I need to know that you have the confidence to, and you've done the work, you've put in the hours, so that we can put money to work. So again, this is one of the things that I'm looking for personally that kind of gives me the conviction that this is worth, investing in. You want to add some, Scott?
Yeah, I have a technical background, so I work with a lot of very technical founders. A lot of them kind of assume that the sales will take care of themselves. If they build it, they will come, and it's definitely 100% false.
Yeah.
I have some thoughts about that.
Yeah.
In my mind, free really ties into revenue in an interesting way, because if you are capable of seeing how a solution can be used across different markets or for different personas, you then can select the highest margin persona, because you don't need to go after the bottom dollar, right? And so that agility, which is a totally silly word to use, but it's true. You have a product, people buy products, they buy service or whatever, and then they have an idea, the customer has an idea how they're going to implement it. Well, you've got to go figure out what those signals are so that you can sell a scaled down, cheaper version of it to a person who has higher buying capability, right? It's this game of experimentation. There's one thing that fits 5 different people. We all buy milk at the grocery store. But some of us buy the $8 a gallon milk, some buy the not. It's different buying personas. Product is very similarly packaged. It happens in every aspect.
Mm-hmm.
But if you can think, if I go to Arturo and I have this thing, I know what his appetite is. It's different. How do I create an experience or journey that matches that persona?
Are you saying free Canva, pro Canva, business Canva? Is that what you're talking about?
Yes and no. I think that customers, with SaaS, with service, with products, people are still human. Buyers are human, right? They have certain needs. This is something that you have to discover when you're figuring out who your persona is, so that your marketing, your message speaks to them, so there's less friction. Because really, what you're trying to find is where are the objections not, and why aren't they there?
Yeah.
I can say yes to you, but I said yes to you because you're outside HEB and you're a cute little Girl Scout and you're harassing me. Not because I want to cookie. I know. But I think it's an interesting experiment to do, because in my business I price, when I first started doing my consulting, I would charge a really minimal fee because I was trying to figure out how to deliver my deliverable well. enough that I could justify a higher price point. So then I started going after different clients. It's like, here's what I do, this is how I do it, and they told me what my price was. So I started off at $100. Within a few months, I was at $4,500 for the same thing.
Yeah.
And so you can do it. It's an experiment. It takes a lot of creativity, but it's an interesting thing to do.
When you change the pool of people you were also going at.
Not entirely.
So the same route, Brazos
Huh.
St.
You did a pilot.
I did.
Invested in the market.
That's true.
Put a price on it, give you a discount, right? We thought an employee, enterprise.
Yes.
You're gonna do a contract with an enterprise. Nobody's gonna give you 100% up front. They wanna test it, prove it. So like you're dealing with Oracle per se, right? They could change their product entirely, and that could tank you, or it could make be a 90% discount year one. But that year two will skyrocket you
Yeah.
into that next.
Yeah.
That next thing.
And like, honestly, like this kind of hits on all of these things, right? So then kind of bringing it back to sort of tactical mode is how do you now package this in your messaging for your customers, but also for your investors? If you're out here trying to raise capital, how do you package to prove that, right? To show that, that was a cool whistle, to show these things and that you've done the work for that, right? I'll even give you like a more specific example. Like a more concrete one is like, do you have an unfair advantage to distribution? Not just have you done the work to be able to put $1 to make $2, but you know, have you been in the insurance industry for so long that you know the CEO of Blue Cross Blue Shield, and you're coming out with like a healthcare related SaaS to diagnose and you need a CPT code. Like very specific. That's an example I've seen myself, and like, you know what? I'm going to take you pretty seriously, because you're going to pick up a phone and that's going to give you a leg up. So again, it's leaning into your strengths and your experience, and giving investors a reason why you have some unfair advantage in some of these. Some of it can be brute force, some of it is experience and connections.
It's also your team. Because I feel very privileged to have such a quality team that we have.
Yeah.
Especially under distribution.
Yeah, yeah.
When we're talking, oh, we're B2B or sales, like, well, we're technically B2B right now because we can go to those clients that represent millions of assets in one single client and, price something out that's most likely way more favorable than
Yeah.
a state that might have only a few thousand.
For sure. And now let me put my investor hat on, right? You send me a deck. I don't know you. I'm not anybody in here. I know most of you now. You're all my best friends. Oh, my computer went to sleep. I hope you guys are not falling asleep just yet. But, if I don't know you and you send me a deck, it's cold, there's just two kind of paths, right? There's number one, like maybe I don't even know the space intimately well myself. So I'm really relying on the team, on the information that I have in front of me. I think the average time spent per slide on a deck from an investor standpoint is like sub-second. So if that doesn't land immediately, if I don't see a reason that is clearly freaking obvious in fifth grade terms too, like please remember this, founders. A quick plug, pitchdeckfeedback.com. I just vibe coded that. Put your decks through there before you send them to me. It's gonna give you feedback on just your messaging. It's not about investment, it's not about business, but it's honestly a bit of a wake-up call, especially if you're technical or if you haven't stepped outside in a while, which I know is a problem we all have as founders, right? We're like in our thing, we're like doing it for too long, and like we're super into it and super knowledgeable and super smart, and then the deck says all these things and you're like, what the hell? That's what that tool's for. But anyways, that cold route, if I can't quickly pick up on your team and why your team is the right people to distribute it, to figure out pricing, to do all this work, honestly, why would I spend a single second further on this? Next. So that's important. I don't want to spend too much time on that because there's a couple more on here. And founder response. I think there's one example in the next slide where like this investor friend of mine gave me the response on like why they invested in this company, and it was like literally just this. The founder was so good at keeping them updated every single week with the right information at the right time without being annoying, right? Like most VCs aren't like awesome, like pleasant people. I'm not gonna answer that because also if you're telling me the same thing every week, no. If you're telling me something good every week, then hell yeah. So, like, I don't think there's a right or wrong. I don't want to influence anybody to start emailing your investors every other day, because there's no right or wrong, and we all have different styles. But my point is founder response, and that's resilience, that's transparency, decisive action in the face of stalls and failures, right? Like Oksana said earlier, what risk have you taken, right? What sacrifices have you made? This is a little bit harder to package and share, but as a pre-seed investor, a lot of the investments, and we have some investors in the room, are very sort of founder focused, right? It's like, I know that like you might even pivot 100%, and like what I invested in is no longer what your company is, but honestly, a small part of me kind of needs to know that if that happens, this founder will still figure that shit out. You know what I mean? Like, they'll figure something else out. Why? Because of that founder response, that resilience to just go like, and like figure it out. Sorry about that. That wasn't supposed to burst, but I get excited. Anyways, let's move on. Another poll time. Let's do a little scan. I think I actually need to do one thing on my end, which is this one. This next one, there's no right or wrong answer, but I want you guys to rank them. And I think responses will drastically vary. There's no right or wrong. But I want to see what you guys come up with. And I think we can see it in real time. How do we do this?
Founder response. I think learning speed also goes into founder response to a certain degree. And my example for that is because of my background as a creative and as an artist, I have no qualms about growing, painting away, and starting from scratch. But my chief technical officer is very much an engineer. So when I did some research on Claude 4.5 at the time, and I said, look, I think we need to completely change how we're building. And we need to, we're hitting some roadblocks, and we've been doing this for the last couple of weeks, couple of months. Mind you, we're still years ahead, just in development. But that singular change, just me watching 2.5-hour video that was uploaded on Twitter 16 hours prior, and calling him up and saying, look, I want you to watch this with trust. We need to change the way we're developing. That one change that week alone, because I did the learning from all of us, is why we went from about to complete our demo MVP to now we'll be debuting full production. That's how.
Nice.
And that was monumental.
Yeah, learning speed. Adapting, right? Real feedback, but also just external factors. That kind of goes back into the effort is no longer the bottleneck. If you're not, augmented coding, I'm not going to call it vibe coding, because engineers truly are just being augmented, right? They're just capable of doing more. I need to vibe code and trust that the code is good and it'll scale and whatever. But engineers are now just sort of superhuman engineers. If I have two engineers in front of me, one is sort of using these tools and the other one isn't, I'm probably going to go towards the first one, right? Like, just you got to adapt, you have to learn, you have to sort of keep up. So it's interesting. I didn't know what the outcome of this one was going to be. Does anybody fundamentally disagree with this order?
I think I'm a little farther along, so I'm a little biased, and 24 would be my one, too. Because that's just where we're at.
Yeah.
So I'm keeping that.
Yeah.
I got customers who are taking my product, and then I have some areas that we taught for sure. Like this vertical, where they beat this stuff up. No.
Yeah.
And so that's what we're looking at. Yeah, switch this vertical to all of our
Yeah, you're responding in real time. You kind of like hearing the external signals that are influencing you, and you're adapting to it, right? So like, I mean, some of this has overlaps. Like this isn't like, I'm telling you, I'm never going to give you the answer. This isn't going to be like, oh my God, like this is the one thing. Some other investors might think completely different. Yeah.
Jeff, I just want to make a comment. Sort of, as I've been a mentor, I've mentored several entrepreneurs. I think one thing about this sort of survey that stands out, just in terms of why like learning speed, or at least that's what I think, is I think the founders that are willing to just test their product really quickly, get the market feedback and learn from it, iterate super fast, that's usually evident really quick.
Mm-hmm.
Like, whereas those who are sort of really want to, they don't understand that 80-20 rule, they want to perfect the product, it almost feels like a delay tactic of sorts. So you can put founders into buckets really quickly, really well.
100%. I love that. Because if it's not out there, if you,
Learning speed, I think.
yeah, well said.
I spend most of my time at 3 right now.
Distribution signals, yeah. I mean, if you have a working product, right, then yeah, I would go all in on distribution. Maybe that'll help you with some of the other things too. But yeah, if you're waiting for perfection, like perfection doesn't exist. So like, what if also there's timing, right? We can expand on this, but timing could be an influence in your success. And if you're just waiting and waiting for perfection, the time might just slip by. It costs money too, right? Oksana mentioned earlier, right? Like our horizon for a fund is usually 10 years. Like I need things to move fast because that whole thing is already so freaking long. And if I don't see traction, movement in a like compact way, I can't. I'm not going to get the confidence to give you more and double down and see, the future, right? I'm also going to like not backtrack on that, but I do also want to paint a different picture because it reminds me of what Oksana said earlier about the outliers. We hear on Twitter every single day, and then the news and LinkedIn, companies going from 0 to 100 million ARR in like 3 months, like 12 weeks, like ridiculous shit. Huge outliers. That is a freaky accident, in my opinion. There's also like really good stories of, I'm trying to think who was like one of the latest ones, that overnight success that took 10 years. I can think of some artists, I'm a musician myself too. Oh my God, they have an orange logo, I can't imagine it. But they were like, kind of just tiny bit of growth for about 5-6 years, and then all of a sudden, they had that massive $100 million overnight success, but it took them 6 years of building, probably a lot of founder response, probably a lot of learning speed. Maybe their speed was a little bit lower, or maybe it was timing too. Like there's so many factors to this thing. This thing is hard. Entrepreneurship is one of the hardest things out there. So yeah, I just wanted to kind of call out, the timeline, the outliers, but there's also a reality of like slow, steady compound, and then it skyrockets after that too, right? And maybe that's when you find that product market fit or that one signal. Yeah.
Seeing this as a step 1 to 4, at any point it helps you back.
Yeah.
Because you respond to iterate, you distribute, price.
Yeah.
If you price before you distribute, you're already deciding who's going to buy.
Yeah. And if it's wrong, nobody's buying, so you better go back to it. You know what I mean? Yeah. I got an idea. My next LinkedIn post, if you follow me, is going to be almost like the circle of life for entrepreneurship, and it's going to be these 4 things that it kind of feeds on itself, the flywheel playing, but maybe not. I might post it. I like to be a little weird on LinkedIn sometimes. Cool. Let's move on. I think, how are we doing on time? They're going to kick us out soon. And it's my first event, so I don't want to get on their bad side. I love the folks here. So, yeah, it's a good conversation. Cool. So we can spend all the time we want in this. We can have a conversation about it too. Like the point of this slide was kind of to, and I know it's a little small, sorry, but I wanted to add all of these, is to like maybe we can talk about like what some of these comments might mean from a conviction standpoint and those 4 things I had or others. And I hope I didn't post something that I wasn't supposed to, Capital Factory folks. I got these from Nick. So Nick, if you're watching, thanks for that. But the reason I wanted to show you this, I mentioned earlier, right? $8 billion or whatever that number was in Austin last year. There was a comment about, like, are those just the huge, billion-dollar rounds that just closed? These are from the last, I think all of these were 6 months. There might be a little bit longer on there. There might be some 6 months, 12 months. There's one that I had the name on it, and like right before I left the house, I was like, wait, this closed 3 days ago? I don't think this is public. I probably shouldn't include it on there, just out of respect. I don't know what their plans are, so I removed it very quickly. So I just wanted to, like, honestly, like, also show founders that money is here. Money is being deployed at the earliest of stages. And here's some reasons why, right? So the first one, strong team out of Tesla and Intel. They have a lot of experience within, vehicles and AI and like all these different things. So I think this is one of the Capital Factory companies. Already seen a bit of traction and interest from commercial markets, from government. So they're wildly early. This is actually like literally a boat company, which is a very capital intensive business. But the signals were the founder, right? They have this distribution networks into government and commercial because of their deep expertise in that industry. So that gives them a leg up. Pre-seed investment that just came out, right? The next one on there is in health tech. Super powerful founding team, everything from the Dean of Innovation at UT with, a Mayo Clinic background. Some of the other teams on there, like generative AI, like experts and scientific people with PhDs. And they're seeing like really good traction with AI in the drug space, and specifically a peptide. Actually chatted with this founder the other day, and it's evolving to not just be like the drug creation and peptide creation, but like now they've created 5 AI scientists that are solving massive scientific problems. Like, where could that end, right? Like, I'm like super excited just thinking about it, because probably the right people to figure it out, right? And that's pre-seed here in town. Aragon AI, yep, that's another seed. HR Tech, founder sold, I think, at 130 million exit once. Their co-founder, if I remember correctly, has like all the connections in that specific space. Again, we need signals as early stage investors to know like that you're going to go figure it out. And the reality of it is that this is incredibly risky stage in investing. So we need to hold on to something. We need to find something that's going to give us that conviction.
What do you want this slide to tell us?
That money's here and money's being deployed. Every single day, I get a message on LinkedIn, some founders saying like, dude, like nobody's investing, like Austin is horrible, like there's so much money in SF, so much money in NYC. This is fact that money is being deployed. And as part of the conversation around conviction is to hopefully help us as founders understand why pre-seed and seed stages are being funded, right? Because like go through my LinkedIn messages, not every single one of them, some are positive, or comments, but you'll find on there some negative tones of it's the town, it's Austin, it's Texas, we suck, right? This is an SF. Number one, there's a lot more money. Yes, that's true. We don't compare financially. I get excited about this, but I'm also very passionate because the reason for me doing this is to help our founders, but also help our, like as an investor, do more than just like, not now, right? Because we never say no, we say not now. I want to help like get real and have tough conversations and real conversations about like what will it take for all of us as founders, and my founder myself, to do more and improve our ecosystem. It is a flywheel there too, the circle of life and funding, right? More exits, more money in town, usually kind of goes back into pre-seed. More pre-seed means better companies, which means more funding, which means maybe more unicorns, which means more exits, which money comes back into the system. But this is my starting point because this is what I know, this is what I love. I think you had something here.
I'm curious about how we define pre-seed and seed at this moment in time. Because
Dude.
looking at this, I kind of see more seed than
Mhm.
Like, a lot of these kind of seem inevitable, like by what they're doing, and even the traction they want. So like I sometimes find it hard to understand how one actually understands or categorizes pre-seed in its dimension for where it is at this point in time in the market, for
Yeah.
whatever vertical it's trying to address versus seed being more like the inevitability is somewhat clearer in the seed stage.
Mhm.
And
Yeah.
I see inevitability with a lot of them.
So some of these I got from like the investment memo, so it's going to sound really nice. Some of them I kind of, sort of narrated it myself, but not everybody in here is like on this massive trajectory of, 100% month over month growth and the things that we might think of as inevitable or a safe bet. I think these are all still wildly risky bets. And that's why I wanted to call out the why. Like nothing on there is saying, again, some of those metrics that are like very specific. Like I think the last one I think is what it was. No. Anyways, we'll read it later. It was literally just founder like conviction, like that person will figure this out, right? Like I would consider that like angel investing. But to answer your question directly, what is the difference between pre-seed seed? I don't think this is a fact, or we all know. We might have some opinions. We'll read about the $4 billion seed, and then we'll read about the $7,000 pre-seed. So like it to me it's irrelevant.
But doesn't it affect in some way terms and like the narrative around it? If you're raising a pre-seed or seed, like how, like if it's unclear for people and founders and investors, like what's the difference between one and the other, and why wouldn't an investor, a founder just say like from day one I'm raising a seed round? Like what makes it so that, hey, yes, this startup fits in a pre-seed round or just pre-seed or seed? What differentiates a startup from being in one bucket or the other?
Yeah. So I think that there's a history lesson here too. Pre-seed is, in the grand scheme of things, I think a newer concept, right? It was just angel and then seed. And then we decided to create pre-seed. There's seed plus, Series A extension. Like we've come up with a lot of titles and stuff. I think maybe the easy answer, and I'm just like spitballing here, there's just an order to things. I think the farther you get, there are some expectations, and I know there's some investors in the room and maybe some folks that have raised money in the past, where sort of targets, right? Especially after this. And we can even look at some of our investors here in town where if you're seed, they might want, $1 million ARR or whatever, like, they'll look for more specific numbers. But again, I still think the one answer maybe I can confidently say is the order of things. We start a pre-seed, then seed, and then it might influence a little bit of how I might process that, right? If you're seed, then I expect a bit, more traction. But at the end of the day, you might have said it, it is also, I'm not investing because you're pre-seed or seed. I'm investing because of the deal that I'm getting, right? My unit economics have to work, and that's the relevance of how we might call this. I give you money, you give me equity. I need to see some, dissolution. Like now we can get very technical into what the impact of funding and whatever. But that's the reality of it, right? Pre-seed or seed is.
I'll make a couple comments, and I think I agree with everything Arturo said. Some of these terms have sort of just evolved and thrown out there. But one thing I've observed that is different is the point at which you get to what this is called price round versus the non-price.
Right.
So there is a real line in the sand there, because when you get to the price round, the cap table gets more scrutiny because they want to know who's in there. Also, where prior to the price round, we're sort of throwing darts, into sort of this black box. We really don't know. Typically in the price round, you're going to get financial projections out of it. If you've already validated your product in the market, there's some customer traction, you should have visibility. So I would encourage founders to think a lot more about, hey, are you in terms of traction pre a price round, which most people, everything we're talking about here, for the most part, is pre a price round. but things are bleeding over. There are some seed rounds that do get priced. So I would start reframing, maybe away from maybe this vocabulary in your own brain, this is fine, to, hey, where am I relative traction versus what investors are looking for given where my traction is.
Right.
That's it, that's the only.
Yeah, I think, no, super valid, yeah.
What we've seen is that the separating pre-seed and seed is mostly done by the founders. The terminology is mostly done by the founders. Sometimes investors are extremely, they have very strong opinions on that, but very often investors don't care too much about the terminology, they want the fundamentals, they want the plan, they want the numbers. But the reason founders sometimes pick between those two terms is based on what they're scheduling for their long-term growth trajectory, including the funding rounds that happen after that. It often has to do with whether or not they're trying to have to exit via an acquisition or exit via an IPO. And a lot of those future projections are under an NDA. So very often the founders will have that conversation with the investors, but they'll usually come to a consensus, but they won't tell you exactly what they're optimizing forward into the future. But almost always they're expecting at least an A round after in some future, and usually it's usually time. So very often you'll have a negotiation with an investor who say, well, you give me X amount of money now, and we're going to deliberately try to raise Series A in 18 months, in 14 months, or in 9 months, or you actually put yourself on a schedule.
Yeah. And there's also like a very financial reason for this, right? I give you money, you spend it, you're going to run out. You need to hit certain metrics for the next set of investors to be attracted to this investment, right? I want you to do this quite quickly as possible because as a pre-seed investor, when you get into those price rounds, now, whatever I might have come in, that's a safe round. Like this is a whole, even now forget half the things, half the time because I'm like, this is all too fucking technical for no reason. No, probably for a reason. But anyways, markups, right? That's what starts giving me the signals that I'm performing well as an investor. And shows the rest of the world that yes, I come in, as a safe. There's some terminology and like the safe. If you're not familiar with it, look it up. Sorry about that. It's usually the vehicle for like early stage investments. Exactly. Yeah. So yeah, the timeline is because you're going to run out of money, so you kind of have to hit these metrics for you to kind of be a little bit more priced at a higher valuation, and then et cetera, et cetera. Nice. Any questions, comments, concerns? 7:38. I want to wrap us up. What do you guys think so far? Like, has this been educational, engaging, worth it? Be honest with me, because if it wasn't, then I probably should tweak it a little bit.
There's more truth there.
So what?
We're speaking truth.
Yeah, and that's the whole rock conversations.
A lot of meetings are all bullshit, I'm doing great.
Yeah.
It's just truth.
Yeah.
This is way more comfortable for startup founders than all these pitch competitions. Because it's, I don't know about the rest of y'all, maybe y'all nail it. She's the public speaker out of the two of us, currently preoccupied. But this is very easy for me to talk when it comes to pitch competitions. It's like, look, if I wanted to be a singer on stage, I would have been, but I don't.
Yeah.
Like, I'm a builder, I like to be with
Yeah.
small groups.
You have to get into some pitches. You have to. 60 seconds.
You get there in 60 seconds.
Yeah.
But it's, are you doing that for 5,000 people, or are you doing that for 5 to 10 songs?
Yeah. So
Not the 5 to 10 kind of person.
just play devil's advocate. I also suggest that you get out of that comfort zone because you never know, right? Public speaking is not something that comes natural to anybody. Honestly, I'm not a fan either, but I've done it enough times where I understand the value of it. I lean into it and like to have fun with it. But it is part of entrepreneurship. You need to know how to sell. You need to know how to communicate. So there's value to pitch competitions. Communicate effectively, right? I think it was here at Capital Factory they used to do the pitch fifth grader or like pitch kids like your startup. And if they couldn't get it, you lost, right? And I think that's still very relevant. That's that pitch deck feedback tool that I built is kind of based on that idea, which is like, can you communicate effectively and efficiently? But Guys, thank you so much for being here. Raw Conversations is the name of the meetup, and it's exactly for this, right? It's like, I just want to get some people in the room, some great folks like you guys, just to like dig into some of these things. And hopefully you leave, with some inspiration at the very least, right? Maybe some things that you can take home and then sort of execute on. Maybe a slightly different reframing of how we do things as founders, with the purpose that we just, are able to do more, are able to do it a little bit better. If that leads to more funding, if that leads to better startups, if that leads to better founders, better experiences, I think this is a crazy ride, and I think experiences and sort of maximizing, the human component of this whole thing is important too. And I think through raw conversations and real sort of connections and opportunities to connect with one another will make our ecosystem, tech ecosystem, especially the early stage, better. And if we do that, I think we'll all be hopefully a little bit more successful. Hopefully I can invest in some of the folks in the room. And we're gonna do this on the fourth Thursday of every month. I put a couple of teasers in there. I'm not gonna necessarily commit to every single one of those, but just to give you a taste of what it's gonna look like, right? We talked about timing earlier. We talked about distribution. We talked about pricing, product truths as a product, background person. The signals. We talked about conviction today, but maybe we can get into more specific signals and metrics. Capital strategy, right? If you have talked to a founder with an investor, a lot of times they'll say, "How are you going to use the money?" It's not an easy thing to just be able to answer. And if you're using a template that says engineering 20%, this, and that, I know it's a template. I see that same percentage every single day on capital strategy and how you're going to use the funding, right? But anyways, market cycles, founder edge, failure. I want to get into some of the dirty details and have some raw conversations. And I hope to see you guys all here 4 weeks from today in this very same room at the very same time. There's some food left over, and that's it. Thank you all very much. Bye.
to a restaurant